The first sign was a property management company Robert had never mentioned. Elena found it by accident, searching for the Wi-Fi password in his home office, a piece of paper with an LLC name and an address in Nevada. She typed the LLC name into a public records database that night after he'd gone to sleep. What she found over the next 4 hours changed everything she thought she knew about her 18-year marriage and the man she had spent it with.
The Nevada LLC was one of three. The others were in Delaware and Wyoming, the two most opaque business registration states in the country. Together, the three entities held approximately $2.1 million in assets, a vacation property in Arizona that had been sold to the Wyoming LLC at below market value, a brokerage account that had been transferred from a joint account to the Delaware LLC 6 months earlier, and a collection of high-value assets that had quietly left their shared balance sheet over 2 years.
Elena hired a forensic accountant recommended by her divorce attorney. The accountant's job was not to find assets, it was to document the paper trail. Every LLC had registered agent records, every bank account had opening documentation, every property transfer had a deed with a date. The transfers had happened systematically over 26 months, beginning the month after Robert had asked her casually if she'd ever thought about moving abroad. She hadn't connected the question to anything at the time. The forensic accountant connected it to everything.
When the divorce proceedings began, Robert's attorney presented a financial disclosure showing net marital assets of approximately $400,000. Elena's attorney submitted the forensic accountant's report at the first hearing. Robert's attorney asked for a 30-day continuance, then another 30 days by the third continuance request. The judge was not sympathetic. The transfers had been methodical enough that the forensic accountant had documented not just the assets but the pattern, and the pattern showed intent.
The judge ordered full disclosure of all three LLCs. Robert's attorneys argued they were premarital business entities. The forensic accountant showed they had been incorporated during the marriage, funded with marital assets, and that two of them had Robert's personal email address as the registered contact. The Arizona property alone had been transferred at $340,000 below a contemporaneous appraisal. The court found this constituted fraudulent concealment and adjusted the asset division accordingly.
Elena received 62% of the total marital estate, including the discovered assets, and an additional award of attorney's fees based on the fraudulent disclosure. Robert was required to liquidate the LLCs and transfer the proceeds within 90 days. The forensic accountant's fee was $18,000. The total recovery above what Robert had disclosed was approximately $1.4 million net of taxes and liquidation costs. The return on that $18,000 bull was approximately 77-1.
The piece of paper with the LLC name and Nevada address was on a post-it note Robert had written himself and left in a drawer. The thing that undid 26 months of careful asset concealment was a post-it note. Preparation meets carelessness. Documentation beats improvisation. The long game is not about revenge. It's about making sure the truth has enough paper behind it that no judge can ignore it. Subscribe.